Hi, it's Lee, and welcome to the Tesla Economist. Whilst I'm doing what I can to gain perspective as to what is happening right now with that stock price, I thought a forward-looking 2023 might be useful, so we could place some sort of forward PE ratio based on a more accurate future earnings compared to the market's version that is even lower than this Q4. One thing I think that the market has got confused with is production versus deliveries. Almost every time any YouTuber talks about a Tesla quarterly earnings, you'll almost always hear them say that production is the figure that matters over deliveries. But the market values deliveries at the time, whereas the investor realizes that long-term, production is far more important. And what we discovered just recently is that even though we were already so impressed with Tesla's production level in Shanghai, out of the blue, they suddenly increased production by a further 30%. This would then in theory mean that all factories or future factories have a capacity of potentially 30% more than we ever thought. Almost as if Tesla just built 30% more factory space, except even better than that, as they did it without having to build anything. So now logistics are going to be what determines deliveries for each quarter more so. We aren't entirely sure how this will work. Perhaps some quarters Tesla will have a bit of a catch-up, with maybe $50,000 or so extra coming out of the inventory and delivering short of $20,000 compared to what was produced, meaning that an additional $30,000 might be delivered than produced in this example. Or it might mean that Tesla are continually behind and lagging, and the lag continues to grow as Tesla continue to ramp. Either way, we now have a somewhat distorted figure of Tesla's real-time progress, or at least the market does. Anyway, I'll do what I can to try and estimate what Tesla's 2023 production might be, and as everyone is feeling kind of down, I'm actually going to keep this sentiment. Rather than sound like a hopeful fanboy that believes everything will go as well as Elon has said. So instead of coming up with a realistic estimate or one that we kind of expect, I thought we would do one that is just easier for us to believe in our current states of mind. We can alter it later and see what we come up with. However, we'll start with a foundation, a run rate of the start of 2023. Now, Elon said that they'll be at 40,000 vehicles a week by the end of this year. But personally, I think this was just a rough number. I mean, Fremont should be at 12,000 a week. Shanghai should be at 21,000, unless they take on more shifts. Apparently there's more capacity there currently if they hire more people. It will be very encouraging to see if that actually happens. So look, we're already at 33,000, and we have the other two factories, which would mean an average of 3,500 each, or perhaps 4,000 from Berlin and 3,000 from Texas, to hit 40,000 total a week. In this scenario, we'll be excluding the semi-truck sales for now too, which should add even more profit. Keeping this conservative, how about we actually lock in that same rate for the entire Q1? There may be some line upgrades required at the new factories. There could be lockdowns in Shanghai, maybe a line upgrade in Fremont. We'll add those potential scenarios in for Q1 too. And this is for production, of course. But it's not so relevant using deliveries for now, as we are doing it for the total of the year. And this would come to a total of 513,000, compared to this end of quarter run rate of 520,000, which is at 40,000 vehicles a week, that Elon said they'd be hitting. So arguably, this is a conservative estimate. Q4 looks like production could be more like 480 to 500,000 even if Tesla get a tailwind. Production is not consistent. Sometimes there are major things that happen. Some quarters that increase production, like line upgrades. But over a year, there are usually enough consistencies to even it out to around 50% annual production growth. Next on to Q2. According to Elon, we're probably at around a run rate of 4 gigawatt hours a year of 4680s. Trying to keep within a realistic realm of being somewhat negative, well, perhaps believable might be a better word. Rather than just throwing out big hopeful numbers to make you feel better, I think in this state of mind, we would rather have something believable rather than hopeful. So I'm going to say that Tesla have reached 20 gigawatt hours a year annual run rate by Q2. In other words, 5 gigawatt hours of production with the 4680 cells for the quarter. Hang on, now how is that believable? If it's taken this long to get to 4 gigawatt hours, and I'm now assuming 5 times as much production in perhaps 6 months' time, sure, only fair I explain as to why it is believable. Well, that 4 gigawatt hours a year run rate is from Cato Road pretty much, which only has a 10 gigawatt hour capacity, i.e. we're at 40%. Now Texas has 4 lines with 25 gigawatt hours a year capacity, i.e. 100 gigawatt hours a year. If that was at 40%, then they alone would be producing 40 gigawatt hours a year. And we are saying just half of that. In fact, we're seeing the same capacity as each of these new lines as Cato Road is producing today. 4 times 4 is 16 from Texas, and the previous 4 from Cato Road makes 20, and that would be if Cato hasn't ramped up any further either. Anyway, that comes to 62,000 vehicles for the quarter with 4680 cells in Texas. However, let's also say that Tesla has now depleted their surplus of 2170 cells that they were previously using in Texas and placed a total of 60,000 for Texas, which is very close to volume production, so it may hit volume production in May sometime. Berlin should also have 4680 cells in production at this stage, but not to the same level, and it would likely be running on 2170 cells too, but supposedly BYD might be supplying cells to compensate there somewhat. Also, I'm sure CATL must have a massive abundance of LFP cells by this time, so I think one way or another, Berlin is capable of ramping up too, perhaps also at volume production, but also producing a standard range version, so a lower ASP to be expected. China may have increased production somewhat too, most likely mainly by sorting logistics when it comes to exporting, in case the Chinese economy is seriously suffering, and Fremont should have ramped up a bit as well. I'm sure Tesla is willing to invest more into getting that factory more efficient, given the demand will be so much higher with the tax credits. Anyway, we see total production at 561,000 for the quarter. Next up, Q3. Now, really, all the ramping for 2023 is about the new factories, but I'm slowly ramping up the other 2 as well. As for starters, we know for sure that there's an additional 20 to 25,000 capable of Shanghai with an extra shift than they have currently. And we have been told to expect Fremont to hit 14,000 a week too, which is actually 182,000 a quarter. And we don't know what Tesla have in mind to replace the long-range Model 3. Most likely a mid-range Model 3 that meets the tax credit, at least in my opinion. Then there are always continual improvements that Tesla keep coming up with. But let's put a bit more reality into this quarter and drop Shanghai production by 30,000 from the previous quarter, as you never know what could have happened. Maybe COVID lockdowns or something. Berlin should be making progress with the 4680s. I wouldn't expect the ramping to take anywhere near as long as Texas, as they will start learning the processes back then. However, I believe initially they only have 2 4680 lines in Berlin with 50 gigawatt hour capacity. Let's say they have achieved that 40% level and are now producing a run rate of 20 gigawatt hours a year, or enough for around 60,000 vehicles a month. In addition to some standard range vehicles too, will take Berlin to 80,000. Equally, we would have seen more 4680 progress, and the Model Y should be up to 80,000 units a quarter now too, for Texas. And of course, we have the Cybertruck meant to start production. Let's just say they only produce 5,000 Cybertrucks in the first quarter of production. This takes us to 581,000 total for the quarter. Remember, this includes an unknown random setback in Shanghai, just to even things out. Then Q4, historically the best. Fremont ramped a little more. I really think Fremont should ramp much more than this, as the vehicles are suddenly worth so much more with the tax credit. But this is meant to be as believable as possible. A little more ramping in Shanghai, still not even averaging 100,000 a month, and the new capacity was actually rumored to be 110,000 a month, and that was around now. So I hope that keeps it believable for you. Some breakthroughs with 4680s this quarter, taking production up to 100,000. Remember, that's still only a run rate of 400,000 annually, which is not particularly good by Tesla standards. I really hope they're doing much better than this. And for Texas, the Model Y will only increase to 90,000, but we had some breakthroughs with Cybertruck, and production averages around 1,500 a week, coming in at 20,000 for the quarter. That comes to a total of 672,000 for the quarter, which is a 2.7 million a year run rate. That's not a good rate. Myself and many of you expect to see over 3 million by this stage. This is only a 28% increase in production from 2022 Q4. The total of these quarters comes to 2.3 million deliveries, up from around 1.4 million for 2022, or an exact 65% increase in production year over year, more than hitting Tesla's 50% target, but not so much due to massive ramps in 2023, more due to some bad quarters in 2022. This would not be a great result. As good as that sounds, bear in mind we are at a 2.1 million a year run rate already at the end of this year, so it was only an additional 200,000 vehicles to increase in production, which I hope is a number very few could argue is too high, which, to remind you again, was the objective here. I hope and expect deliveries to be much higher. However, the purpose of this was to know how much profit each quarter brings in, so we can compare it to today's stock price. and work out a forward PE ratio based on it. So we'll go through the financials in the next video. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.